Hi guys, today is the 10th of February 2022. This is a follow-up video adding on to the 10th of January 2022 video we did on a couple of positions that we said that we'd monitor during the course of the next few weeks until the sort of duration or expiration of the trades themselves. So the first trade, I'll try not to bore you with the mechanics and the semantics and the rather peculiar and unique language. This was actually what's called a vertical ladder. This was placed on the S&P 500 and it had an expiry of February the 28th. So I'm going to price up the position that we had on, or we placed, sorry. Let me get the relevant strikes here. So that was the 4,500, 44.70, capped by the 41.50. Excuse my noisy dog in the background. And we received a total of $18, so $1,800 for the contract size that we placed, and we can now close this position for $340. So taking in $1,800, we can now close for $340 and bank, obviously, the majority of the money there. It has 18 days to go, so we might as well do that. We knew at the outset that this was a very high probability trade for us, and that it was highly likely we were to be successful. So one of the relevant points to make, I suppose, at this stage is to look at the chart over this period as well. So if we go back to when we opened the trade, which was the 10th of January, which was here, on this candlestick here, we can see this is where the market was. Now, it couldn't really have played out any better for us in terms of the price action, because the market then had a massive move to the downside. So we saw a 10% high-low swing with the S&P 500. And we can see from our position that we're now able to close the position off at significant profit. So just to clarify, we were paid $1,800 to assume the risk of this position. We knew it was highly likely to be in our favor, and now we can close this or pass the risk on to somebody else, or indeed sell the risk on, as it were, for now $365, $350, and therefore we've banked $1,400, $1,500 of that trade. So that's a nice position to be in, but it does illustrate that having seen a big move to the downside here, we can continue to profit regardless of market direction. That's really important here, and this example has really played out and gives testament to and credence to the strategies that we're looking at here. The other position that we considered was going to the 14th of April, and it was once again the same instrument, the S&P 500. In this case, we're using the E-minis, which is a derivative of that. And the position, you might recall if you were to review the video, was the 25.50 put. Okay, so the 25.50 put, we took in $4.10 or $410 on one contract, and we can now close that off with 63 days to go. We can close it off for $2.80 or $280 in total for the position. So we've banked the money there. This morning when I looked at this, it was around about $2, so that the market's down today. But this gives you an indication of what we can close it off for, bank the profit and move on. So for the position that was originally 90-something days to expiry, from the top of my head, we can now close off with 63 days of that to go, and having banked a significant portion of the profit, and then we go again. So just to recap, the market has moved significantly against this position, but it doesn't matter because we knew the odds were in our favour. Okay, so we knew that there was a very, very high chance of us being a success on this particular trade, and that's played out exactly as we anticipated as well. So we've lived through the noise and the chaos of the markets moving down fairly sharply and significantly during this period, but it hasn't affected our ability to make profit. The positions and the maths have washed out perfectly for us, and this is an example of positions that we're now gravitating towards, moving away from the opaque positions in the private equity markets, private finance funds, that kind of thing, where we to some extent we lose a bit of control, we lose transparency. This gives us a liquid method of achieving low risk returns that are significantly greater than the market would provide itself. But more importantly, this is non-directional. Whatever happens, we can profit here. we're looking for those exceptional situations and circumstances at all times, and we will have plenty of those on a sort of bi-weekly, third weekly basis as well. So hopefully this has added some value to the previous video and seen in real time and in live trade play out exactly how this can work. I will provide you with more details as well on subsequent trades, just so you can become more involved and understand the mechanics in more detail. Next time I won't have a dog eating loudly and drinking loudly in the background as well.